Hi dear traders and investors, today is Tuesday, February 14. I'm glad to present you a fresh market review prepared for InstaForex. First, I'd like to congratulate you all Forex traders who are in love on St. Valentine's Day. Apart from this awesome event, I remind you about another crucial event. The US inflation data is due at 8:30 USD. It's a high anticipated event for all traders and even for Jerome Powell. He must have been biting his nails, unable to fall asleep before the publication. My friends, I wouldn't advise anyone to enter the market and open large bets before this event. At the time of the publication, the market will burst into high volatility. The report will enable new trends. I have some trading ideas to share with you. Let's go. Here's the gold chart on the MetaTrader 4. Gold was trading lower until today. As you see on the chart, gold is clicking into gear before the CPI report. There's a popular saying, buy the rumor, sell the fact. When everyone rushes to buy the rumor, the actual market will go in the opposite direction after the news. It happens in most cases, but not always. I'm not interested in gold as a speculative instrument right now. Why? Because I don't see any good targets suggested by the stop hunting strategy. Nothing to hunt for. I wouldn't dive into trading now and wouldn't risk my money. The euro-dollar pair is gaining ground like gold is doing. It doesn't mean that demand for the euro has been boosted. It means that traders are selling bucks. They are nervous ahead of the news, which could be unpredictable. I don't have a target to hunt for at the moment. Looking at the 4-hour chart, we see a bullish trend. Let's speak about swing points ahead. I see resistance is at 1.0780. It's a swing high of February 9. Perhaps this swing high will turn into resistance. If you decide to go short there, you will set a stop loss just 20 pips above. Again, no proper targets. Let's assume a downward correction. I don't understand where to set a take profit. There's a resistance, but there are no proper targets. The currency pair has been trading higher in the American session yesterday, in the Asian and European sessions today. A few hours are left before the news. The CPI report is a lottery. As for me, I would invent a trading plan on the basis of market moves after the news. The pound sterling is also trying to pick up steam in the same pattern as the euro. The US dollar is ruling market sentiment. The sterling and the euro lost their independence long ago. I see some room for the sterling to fall. The thing is that the US non-farm payrolls were surprisingly strong, so the US dollar advanced across the board. If the CPI remains at high levels, Powell will have to respond to this either by a jumbo rate hike or by a faster pace of further rate hikes. Extra rate hikes are possible as emergency moves between regular meetings. This scenario is hardly realistic, so the solution is a sharp rate hike. The market could price in this scenario. All in all, strong NFPs, a high CPI and a hawkish Powell will set the stage for aggressive rate hikes. Alternatively, if the CPI proves easing inflation, it will not correlate to strong employment. In this case, the market will switch to a flat mode from the fundamental point. Once again, in case of the high CPI, the US dollar will develop the second bullish wave and assert its strength fundamentally. Hence, the pound-dollar pair will go down, so we will have the reason to plan short positions on the instrument. On the other hand, if inflation weakens, the pair will either get stuck flat or will go up. I'm trying to explain to you the essence of such moves. I suggest we wait for the news and plan our positions. Yesterday, the dollar-yen pair updated accurately a one-year high. I see some minor breakouts there. I would recommend close positions. A further move will depend on the US inflation. If the CPI is high, the instrument will surge. The dollar-yen pair indicates a probable breakout upward. That's all for today. Beware of high volatility tonight. See you online soon.